All right, good morning, good afternoon, or good evening, everyone, depending on where in the world you're joining us from. And welcome to everybody as well, joining us through LinkedIn Live and YouTube. We're going to be starting in just a few minutes, just to give everybody a chance to join. Hi, Jeff, to Long Island. All right, I think we're just going to get started now. Hello again to everybody, and thank you for joining us for this webinar with Ownera and SEI about connecting FIX to the world of tokenized assets. My name is Tomasz, and I'm an ecosystem manager at LF Decentralized Trust. Today, I'm going to have a chance to take you through some housekeeping and also introduce you to our esteemed panelists. First, I would like to emphasize that all is welcome in our community, and we strive to create a safe and welcoming environment for everybody. So please follow our code of conduct when interacting with each other on this webinar or broadly in our community as well. And you can find our code of conduct on our website and also on our wiki. All of the LF Decentralized Trust webinars are held under the LF antitrust policy, which you can also find on the website on our wiki as well. This session is being recorded, and you'll be able to find it later along with the slides on our webinar library, as well as on our YouTube channel. Now, if you joined any of our webinars before, you know that we encourage you to stay as active as possible, and the more participation we get, the better experience for everyone. So when you have a question, please raise your hand and I will unmute you and you can speak up and ask your questions to the panelists. You can also use the Q&A box or the chat button to ask your questions. For those of you joining us live on either YouTube or LinkedIn Live, you can use the comment section to ask your questions and I will ask them to the panelists as well. And I will also share the link to the webinar there as well, so you're welcome to join the live session too. Now, without further ado, it's my pleasure to introduce Ami Ben-David, who is co-founder and CEO of Ownera, and Justin Heyer, who is the Director of New Business Incubation at SEI. So, Ami and Justin, over to you.
Thank you, Thomas, and let me start. Welcome, everybody. I'm Ami Ben-David, and I'm the founder and the CEO of Ownera. And today we're going to talk about how we work together with SEI, with the Linux Foundation, and multiple other parties to connect the FIX ecosystem to the tokenization ecosystem, which is basically represented through the FIN-P2P protocol. And let me put a presentation on screen and share a little bit about it with you. Can you see my screen?
Yes, looks good.
Okay. So just in a few words about the world of tokenization. Tokenization is coming to the center stage recently. But it's been something that we've been working on, and multiple banks, financial institutions, crypto companies have been working on for the last several years. The reason is that tokenization is very powerful in basically digitizing financial ecosystems and financial worlds. It can flatten pre-trade, trade, post-trade activities into one fast, efficient, reliable network. And as you can see here, multiple reports are talking about trillions of dollars worth of assets to be tokenized by 2030, and we're already seeing kind of the flow towards that now. There are two reasons why people go to tokenization. One is cost saving. It saves on operation, on technology, on capital efficiency, but also there's a revenue generation. In terms of revenues, it opens up instant collateral mobility, access to new assets and capital formation. Some people call it a democratization of access to capital in some cases. There's easier secondary trading and lending capabilities. more opportunities for asset servicing, payment, transfer, and so on. And now the connection of the fact that the data is being digitized with AI, so that you can get AI services. So this market is growing very fast. And actually, it started growing much faster in the last 3 months. The reason is the change in administration in the U.S. Changed the approach of the regulators to tokenization. We've seen the regulators like the SEC and the OCC opening the doors for financial institutions to hold, manage trades, both tokenized assets and cash, which was, before it wasn't a no, but it wasn't a yes. It was just go ahead and try, and maybe we'll sue you, and maybe we won't. So it wasn't very, open. But at this point, it's very much a positive and affirmative. We've seen also a wave of tokenized assets and digital cash offerings like stable coins coming from our partners and other people in the market. So it's growing rapidly, one could say exponentially as well. And you're seeing market leaders like BlackRock CEO Larry Fink talking about how all assets are going to be tokenized. Interestingly, we are working on a project with DTCC, which was announced last week, in which they are looking at making assets available for collateral mobility applications, and that's going to be exposed over the next few weeks. It's done as a first stage as an experiment, but once it is concluded and approved by regulators like the SEC and others, this can open the market quite dramatically for tokenized assets. So now you have the world of tokenized assets, which sits on one side, and on the other side is the FIX market. And FIX is an open source environment led by the FIX organization. And we basically put together a group of that is an alliance between the FIX organization and the protocol that I'm going to talk to you about, which is called FINP2P, which is the protocol that enables interoperability in the tokenized market. So let me just start by explaining a little bit about FINP2P and what it does. FINP2P is a protocol that is designed to provide interoperability in the world of tokenization. Now, any one of you that comes from crypto, when you hear the word interoperability, you think about what's appearing here on the right side. You're thinking about, in crypto, interoperability typically means moving assets from blockchain X to blockchain Y. And because blockchain X cannot speak to blockchain Y, right? There's a network in the middle. It could be bridges, it could be oracles. There are multiple solutions in the market. And basically, you're able to maybe lock and mint on the other side, or burn and mint on the other side, and solutions like that. In the world of tokenization, this is less of a problem, because in tokenization, it's all regulated financial institutions. They talk to each other. In many cases, they may not want a third-party bridge network connecting them. They just want to connect directly peer-to-peer to each other, in a similar way to how they connect with each other peer-to-peer with FIX. So there's a lot of similarities between FIX and FINP2P as a protocol. And what FINP2P as a protocol enables is basically the connection of the different supply, demand, services, and data in the market of tokenization. So you have the payment providers that can be connected with a FINP2P router, the tokenization providers, which again can be connected with the router, market infrastructure like DTCC, other CSDs. You have the custodians, you have the investment platform, which is the front end, and you have the collateral and lending that want to connect as well. And what FINP2P is doing is it is connecting them to each other, and by doing that, it's connecting them also to the public and private blockchains underneath. So FINP2P is at a higher level protocol. It's not done at the blockchain layer. It's done at one layer above the layer of the application. And the concept for FINP2P is routers. So routers are connected to each, for example, each tokenization engine with an adapter, each payment agent with a router, and so on. So the question was, okay, what router is needed in order to connect investor platforms to the system? And what we found was that indeed investor platforms, many of them are using actually FIX. So the FINP2P was basically extended with a FIX gateway to enable investment platform to communicate with the rest of the tokenization market. So if you have an investment platform, you basically connect to the FIX gateway. We have here just, I'll give him a minute or two just to say a few words about FINP2P as a protocol. Anthony Woolley, who was one of the originators of the protocol and under GDF. So, Anthony, maybe you can say just a couple of words about FinP2P and how it was created and what target it is achieving now.
Sure. Thanks, Sammy. So it's actually, the time flies. It was actually 5 years ago that we started to bring the industry together to try and solve this solution. How do you interconnect market participants in the world of tokenization? And from the outset, we took a very open approach to that. Ultimately, that group developed FinP2P as a peer-to-peer protocol, which is open under a Creative Commons license. And I spent many of my formative years, for want of a better word, in capital markets. Many of you may be in capital markets on the call. Know that the FIX protocol was also very transformative in terms of taking public capital markets electronic. And these two protocols are really natural bedfellows. So FIX is an open protocol. It's open under a Creative Commons license. And like FinP2P, it's a peer-to-peer protocol. Regulated institutions have FIX infrastructure and they choose to connect bilaterally to other institutions. So it's not a centralized network. And it's all discretionary who connects to who. And FinP2P follows the same pattern. It's peer-to-peer. Regulated institutions take it and use it to connect to one another. So it's not a centralized network. It's not a centralized venue, but it has the effect of opening up through many bilateral peer-to-peer connections, the ability to connect market participants and open this world of tokenization. And I think so we developed that with Global Digital Finance and not-for-profit. And it was last summer that we started working with the FIX trading community, which is really the umbrella group that's really driving and continuing to drive the adoption of the FIX protocol. And I think as Amy might expand in a minute, you have got FIX, which handles the messaging, and it's FinP2P that, as well as the messaging, can also now handle the normalization of all of the complexity of these different tokenization environments, and most importantly, orchestrate settlement, DVP, DVD, PVP. Amy, maybe at that point, before I overlap with you too much, I'll hand back to you.
Thank you. So what is the idea? I'll give a simple metaphor for trying to understand how FinP2P routers are trying to solve interconnectivity in this market and how they connect to FIX. So think about it this way. Let's say you want to order an Uber, right? So you go to your phone and you order an Uber. And when you order an Uber, you don't really think whether the Uber call actually ended on Amazon AWS or whether it ended on Google Cloud or on Microsoft Azure. You don't care. You just order the cab through your phone. It goes to the router, either your mobile company's router or your Wi-Fi at home, and then it is routed to the router of Uber, and they take care of whatever they need to do. 2 minutes later, you can use the same phone to watch a Netflix movie. That will be routed to the router of Netflix. So Netflix might be using a different solution and it's completely different application. And in the same way, we do not want an investor platform to have to worry about connecting to 100 different tokenization solutions on 100 different blockchains and having to know exactly how to deal with each one of them separately, and then dealing with different payment solutions and so on, and different market providers and custodians and so on. So the routers is a very good way of abstracting all of that. And in the same way that on the internet, we have TCP/IP to connect all the routers to each other, which is an open protocol, multi-use case, and so on. FinP2P is doing exactly the same. It is open and it allows everybody to connect with everybody, and its openness is creating the interoperability. And in addition, in the world of internet, every user has a TCP/IP address, which says through my address I can communicate over TCP/IP. In the world of FinP2P, every user has a wallet address. So the wallet address is the equivalent of the TCP/IP address, and FinP2P is the equivalent of TCP. And basically, that's what you get to have an interoperable platform. Before we continue to SEI and how they actually connected their investor platforms to a router in order to enable trading, I want to show you in a very visible way what sort of platform can be built with this technology. So I want to take you to an example of basically an exchange that offers tokenized assets for client to buy. And I want to show you how through this connectivity and potentially through a fixed gateway, this front end could be built. And effectively, it allows them to build what I would call a Coinbase for tokenized assets in a box, basically. One API, one router, one FIMP2P router, one fixed gateway, and effectively, you can order and manage any asset from any source. So let me take you through this demonstration for 2 minutes, and then we'll take it from there. So what you're seeing here is basically a front end. Specifically, this exchange is Archax, the first FCA-approved regulated tokenization exchange in the UK with licenses in Europe and now coming to the US as well. So very regulator-heavy kind of environment. So everything is done according to all the specs of financial institutions. And what you're seeing here is basically a trading platform for tokenized assets. And this whole thing is based on a router. So if you have a fixed connectivity, you could potentially build something like that to connect to your systems. What it has here is it has, myself, Ami Ben David, as the user. And as I said before, as a user, I'm being basically allocated a wallet address, and that's me, my wallet address. And in this case, my wallet address, I chose to have it managed through Fireblocks. And then you can see the assets that I have. I have some USDC, which is connected to a router that gives me the balance. And I have some fiat, which again can connect to a router that goes not only to blockchain, it goes actually to legacy platforms and bring you the actual fiat balance, which I have in USD and GBP and euros. So that's my payment, okay? And then I have the assets. These are tokenized assets that I own. They're coming from different blockchains. Some of them are on Hedera, some on Ethereum, some on private chains. But for the fixed kind of front end that you might build, it wouldn't matter because you can get through the FIX bridge, basically the FIX endpoint, all the information that you want by just asking for get balance and getting the information. Okay? And if you want to do a trade, it's quite simple. You go in, you see all the information about the asset, which again can come through a fixed message. You can choose to invest. You choose the payment mechanism. So in this case, I'll choose USDC. I'll just buy 1,000 shares for $1,000. And when I confirm this, basically, you could program it to send a fixed message, right, to the router through the fixed gateway, and then it will execute on FIMP2P. That means that now we're in FIMP2P land. And in FIMP2P land, I'm now going to my phone, and on my phone, there's going to be a message from Fireblocks, which is managing my wallet address. So I'm going to go in, I'm going to approve the transaction. Let me just do it quickly. And I'm going to do it with my face recognition. It's all based on whatever processes I have. Now that I've done that, the transaction is being sent to the blockchain, whatever blockchain it is, executed. And when the DVP is finished and executed, there will be a fixed message sent back, and you see that the delivery of 1,000 units, again, 1,000 USDC, was completed successfully. So effectively, I just bought some shares. If I go back to the slide presentation, what I've done is I've taken, there was basically multiple tokenization routers that published multiple assets. There were multiple payment routers that published multiple payment options and balances. My trading platform connected, it can connect through an API, but can connect through FIX as well to get all this information. I did a trade. The trade was routed to the custody to be signed. I signed it with my Fireblocks wallet. A DVP was executed, or an atomic swap, or whatever is the best way to exchange money for tokenized assets. And a fixed message could be sent back to the platform to say this is done. So this is a crash course in what you could do with a FIX and FIMP2P connectivity. Effectively, you can turn your FIX front end into a, as I called it before, Coinbase in a box for tokenized assets. And the beauty is that you only connect to FIX. So whenever additional parties add more tokenization solutions connected to router and more payment solutions connected to router, the more you will have access to more assets. And vice versa. If you're a tokenizer and you tokenize your assets, you will now be able to access any FIX-enabled order management or trading management system that has access to a router and basically sell and provide liquidity and provide collateral services to these people. So that's basically a really quick, we are at minute 21 now, so a pretty quick description of how it works. We'll go back to it in more details later, but I want to hand over to Justin to talk a little bit about how SEI see this interoperability capability and how they actually started to connect them. Justin, over to you.
Thank you so much, and hello to everyone near and far here on this webinar or YouTube live. Thank you so much, Ami, Anthony, and the rest of the Ownera team. It's great to be on here with you and many of the other participants that we've been participating with in this sandbox. But to set the stage a little bit as to why SEI was involved, SEI is kind of like a little bit of a sleepy giant. And I say that because we're typically B2B2C. So we're not necessarily out front and center to the retail market in large capacities, but we are a significant player in financial services, not only as an asset manager, but also as a provider of valued services to all sorts of financial institutions and intermediaries. So just to give a little context on size, 1.6 trillion in AUM and AUA. We have over $7 trillion that flows through our wealth platforms and custody platforms. We're about 5,000 person footprint across the globe. And just in terms of size and segment, we have 8 of the top 20 U.S. global banks and 43 of the top 100 asset managers. And so when Ami's referring to bringing market participants together, we can go to the next slide. We serve both buy side and sell side through 3 core pillars: our technology, operations, and asset management. So we ourselves are an asset manager who may in the future tokenize. We are a provider of applications and services through technology and outsourced support to help banks, advisors, and asset managers do their job, whether it's custody or wealth platforms, fund administration or transfer agency, institutional OCIO. So we are dealing with a broad swath of market participants in various different capacities that are involved at different journeys with tokenization and blockchain. And so when I think about tokenization and blockchain, it can be looked at in 2 ways. It's either going to be disruptive or it's going to be opportunistic. And where we sit at the middle is really important for us to make strong strategic decisions that don't require years and years and years to manifest. And one of the key things that Ami brings up is that this abstraction through a standardized protocol allows us to potentially evolve our existing legacy applications in a gradual way that allows us to do it more quickly as we move more and more to a more decentralized model in the future and where regulation starts to have clear guardrails. Next slide. I mentioned we're global. The reason I bring that up is with decentralization and tokenization, it is global. So our footprint is large. Our applications are not quite 24/7 by 365, but that is the intention over time. And it's naturally going to be a pressure for us. Tokenization and blockchain is one of the enablers that allows systems and applications to eventually achieve that follow the sun model 24/7, 365. Next slide. All right. Ultimately, this all comes together as that we sometimes sit behind the scenes, sometimes we're front and center, but we serve a broad reach of market participants. They all have different needs and wants. But the one piece of this is that we do sit in the middle as part of the value chain. So whether it's the initial issuance of an asset all the way through the value chain up to the investor, we do play a role either directly or indirectly. And so it's imperative that SEI continues to involve ourselves in projects like this to help better educate our clients, but also make sure that we're helping them identify their needs and wants to grow. And that's the biggest part is, SEI is trying to build growth for our clients, and the natural trickle effect is that, we grow with them. And so what I want to leave, everybody with before we get into the next section is this participation in the sandbox was very key into helping us understand how we want to think strategically moving forward to ensure that our clients are going to be able to maximize the value that blockchain and this technology will bring. And as Ami mentioned, there's no one chain that's going to rule them all. There's naturally a need for us to be multi-custody or multi-venue to support all of our clients. And this is a natural evolution of that. And the fact that we can use existing technology to step into it provides us a means to do it more quickly without a massive lift and shift. Now, for the technology folks on the call, every organization and every application has significant tech debt, to have things that they need to work on to potentially do these things. Having a model that allows you to step into a strategy like this is very important and something that we wanted to evaluate. So.
So going back to the FinP2P target and the reason we're connected to FIX is that basically the target is to build a network effect for tokenized market that will enable it to grow. One of the problems with tokenization was very siloed, very fragmented. The tokenized solution also required the buyer to go and register with them and buy from them. And then if the client wants to buy a second tokenized asset, they have to go again and register from with another provider and sign with them. It didn't allow companies like SEI to connect their order management system with one go to everybody. So in order to build a network effect and allow the market to grow, you have to connect multiple things. You have to connect the supply. You have to connect the supply of assets, basically. You have to connect all the demand. You have to connect the cash providers. You have to connect security services, different security services from custody to transfer agents to CSDs and so on. You need to provide support for collateral application, margin management systems, and so on. And you need the data. Without the data, the whole thing doesn't work. And especially in private markets, the data is very, very disparate, and it's in different places and have to be brought together. To do that, basically, FinP2P enables 4 types of routers. As I said before, one type is the router that provides tokenization and connects. It doesn't tokenize itself. It connects to tokenization solutions and blockchain. The other one is the trading, which is the one that connects to FIX. The other one is payment, which connects to cash, either digital or traditional fiat. And the custody, the ability to basically sign on behalf of clients. Now, in order to bring those 2 platforms together, FinP2P and FIX, FIX and FinP2P Alliance basically created an alliance. We have Milena here, who should give you more details later on about the alliance itself. But one of the main things that the alliance did is it created basically a sandbox. And in this sandbox, we created multiple tokenization engine, and we connected to multiple payment services, multiple custody, and we focused on multiple trading platform and order management systems, SEI being one of them, that connected to the FIX gateway and allowed the connectivity to the buy-side routers. So that sandbox was created for people to be able to experiment and work with this. And indeed, dozens of financial institutions participated in the group, and many of them utilized the FIX sandbox in order to create applications. And there were a lot of learnings that came out of this, and the learning were put together in a document published by Deloitte, and we'll give you the details to where you can get the document later that explains how it works and goes through the different use cases that were developed. Maybe jumping one layer deeper into how this actually works, we have here basically some flows. This one for a primary investment. What is the flows? And then we're going to go into one deeper flow into specifically how SEI implemented their sandbox connectivity. So let's start with the general flow, and then we'll go to the more specific one. Justin, do you want to take over on describing the flows here?
So for those that are familiar with FIX, this will feel pretty familiar. But for those that are not, as Anthony alluded to, that there is a direct discretionary decision between a source and a target to establish a connection to start facilitate messaging. In this particular case, if I'm to use SEI as the source and a asset manager as the target, we each have essentially a source and target comp ID, which essentially allows us to initiate a session and target who do we want to connect with. So this first part of the session is something that you're going to do in almost every FIX interaction that you make. So we kick off by essentially saying, using our source comp ID, here's who we want to talk to. We request that connection. Once they verify it's us that's looking to connect to them, they can essentially return the response that allows us to establish a secure means for sending messages. Now, if we're following the full RFQ to message placement, the initial inquiry may be what assets are available, essentially what's the depth of quantity and available pricing that might be eligible for our investment platform to initiate an order. So we're looking for assets, providing certain criteria as to what types of securities we're looking for. In our particular use case, we knew exactly which use case asset we were focused on. So this part of it was essentially staged or simulated. But once you've essentially identified the assets on the blockchain of choice, you now can either request existing balances of what your account has if you're selling. If you're looking for buying for the first time, this step may be something that you can skip.
Yes. I can say one more thing about the asset discovery. FinP2P is completely permissioned. So financial institutions connect to each other, and every asset issuer basically can decide which destinations they want to distribute to. And then those distribution get the assets, and they choose which one they want to take. So it's permission from both sides, right? And if you're not, the asset that you're not permissioned to see, you don't see it. It's as if they don't exist. So it's not one big network where everybody sees everything. It's a institutional permissioned network between financial institutions that basically agree to distribute between them. So there's definitely an element of, if there's an exchange, the exchange will decide which asset they want to list and which assets they don't want to list from a larger group of assets that were made available for that exchange.
And then that complies with how most financial organizations and asset managers function today. So in the context of our use case of subscribing to a private market asset, the asset manager has full discretion if he wants to limit exposure of that asset to a particular persona or clientele. So if you're not an existing distribution channel for that asset, they may choose not to make it available in the asset discovery.
Okay.
Next
page, yeah. Asset to asset book.
Yep. So in our particular case, we were working on the asset manager side through a company called Platonic, who manages the Platonic blockchain. They were managing the fund administration and books for a stratified digital income fund. So from our side, once we've established the asset from our end within our portfolio management system, we've essentially instructed through FIX the message 35D to essentially say we want to essentially initiate a trade request for this asset. So essentially what we're doing is we're sending a message in a single order D that creates an execution plan on the FIN-P2P side. FIN-P2P is essentially taking that FIX message and translating it in a normalized fashion to the respective router to send it to Platonic. Platonic can essentially acknowledge that, yes, they want to receive this order and accept the transaction for issuance for this an eligible investor. And essentially, we're getting back what's called a 35.8, which is an execution report detailing the sequence of orders placed and the details of the execution, price, quantity, any other attributes or metadata related to the transaction. And we're using that fixed message then to translate it back to our system. From there, using either the API or FIX, you can then reestablish the changes to the accounting book of record on our side. But looking at the blockchain, you can now actually confirm the wallet balance has essentially updated appropriately. If you're using cash balances or token balances to pay for it, you should see the debits and credits accordingly from that call.
Yeah, I would say that, this is, while it looks theoretical, you've seen before in the Archegos example, there are already hundreds of products available. If you connected your FIX system to more, there are hundreds of tokenized products that you can get access to, including multiple money market funds, many of them with kind of minimum investment that is relatively low. So, and some of them are retail oriented as well. So there's a lot of assets already today available in this network. but I can definitely say that following the changes in the U.S. administration kind of regulation approach, it's growing exponentially right now, and up to the point where we're seeing, a future not too far into the horizon, where potentially every asset will be available in a tokenized form. Even assets that are not originally tokenized will be available in tokenized form to be used as collateral, because tokenizing a collateral is a very strong proposition, because today for collateral to move, even if it's electronic, it takes between a few hours and a few days, and liquidity is limited. When it is tokenized, right, the collateral mobility is instant, and you can do things like intraday repo, where you can do repo trades. For those of you who don't know this market, it's a market that runs several trillions a day between banks. So that's a market that can benefit a lot if you can actually do collateral mobility within 1 second, as opposed to doing it overnight. So all of these things are supported by FIX, and there's actually now a FIX call to issue or to initiate a intraday repo activity. So if your organization is enabling intraday repo activity and using FIX, you could potentially connect to tokenized repo and intraday repo by the minute with a simple FIX call, similar to the one that's here, the sent execution. Moving on to the actual flow that you've built, Justin.
Yeah, this is meant to take conceptually that flow and turn it into kind of how it unraveled in practice. So in this particular use case, SEI was partnered with one of our global banks to partner on this sandbox solution. And so just to kind of level set on the colors here, the kind of blue color where the custody platform is, this is all SEI products or applications. The more salmon color, that's going to be our client. Ownera is in the kind of aqua blue. And then obviously representation of other market participants for the purple and the orange on the right-hand side of this diagram. And so I'm going to walk through this just to kind of help you better understand the concepts of how it worked for us. But also just to say, like, most existing systems, I know Archax has obviously been able to do it and do it very quickly. But for legacy applications that have years and years of what they've built and large backlogs, doing a complete overhaul is an unnecessary activity. So this is a means for us to take what we have today and reach this digital and tokenized economy more efficiently in the short term. And that was what we wanted to explore. Can we connect to the tokenized economy? Can we allow it to update and work with our existing accounting book of record? And can we do it with relatively limited costs? So first and foremost, any application that is charged with it needs market data. We at SEI have our asset data services, which serves all the metadata, characteristics, pricing information needed for portfolio managers, advisors to act on investment decisions or portfolio decisions about their clients' accounts. So within the custody platform, we took a number of specific accounts related to our client and essentially wanted to execute a use case around the subscription of a private market asset, in this case, the digital income fund that was essentially brought on chain by the Platonic team. So from number 2 to number 3, we leveraged our portfolio management experience called PME to essentially initiate the order where our P&I accounting is done, going through all the pre-trade kind of checks, right? Looking for asset pricing, looking for do we have sufficient cash on hand to meet whatever capital contributions and anything else that we do before an order is placed. Now, this existing portfolio management experience is multi-tenant in the sense that it's connected to multiple order management systems, right? Whether it's existing ones like Advent Geneva or Moxie or others. We fit for purpose based on either the asset type or our client relationships. Will route orders where necessary. So this is a natural evolution of expanding into digital through another OMS. So from our front office experience, I essentially were able to identify the digital income fund for order, placing in the appropriate inputs like the duration, like is this fill or kill? In this case, it was good till canceled. We put in the order quantity and the amounts to place it. Today, what that does is we essentially have streaming services with essentially Kafka underneath that allows us to publish JSON messages to the appropriate next phase, which if it's FIX, it's being routed to an RTM gateway. In this particular model, what we're doing is we're taking that JSON through the digital asset OMS and specifically enriching it with the details necessary to go to the Ownera FIX adapter. So this is taking into account things that are unique to tokenized assets, unique to the FIX adapter, to essentially construct the appropriate FIX message from 4 to 5 so that our existing RTM gateway can do exactly what it does today with little to no changes. We identify the source comp ID that represents us to FinP2P, and we place the target comp ID of essentially who do we want to target this message to on the other side. In this case, it's the Platonic fund admin that's controlling the interest in deployment or issuance of this digital income fund. Our FIX gateway does what it does. It takes that information, establishes the connection as it does today as part of an outbound message to the adapter. That adapter in number 6 essentially is connecting to the FinP2P router, and it's handling the abstraction of things that we don't want to maintain right now. What Ownera is doing is maintaining the normalization of many blockchains, many protocol changes, which for a development organization or team could be a very, very expensive maintenance overhead. So this is very helpful for an organization that's looking to get into this without having to take on that burden of having to connect everywhere individually and maintaining the ongoing maintenance of any changes that occur. So that FinP2P node is identifying based on the message context and characteristics from 7 to 8, and essentially saying, here is the connection details and here's the execution details that we're looking to publish. Now, I want to preface this next part by saying that in a real use case for private market assets, and with any assets for that matter, private market assets have very clear requirements that are needed to allow an investor into a fund, right? There's KYC and AML checks that need to be done. Only certain investors can get into private market assets under current regulations, depending on where it's issued. And the third part is what's called accreditation. Since this is a US-based distribution model, they need to be an accredited investor. Now, that part isn't 100% manifested in this sandbox, but what we can do is we did pre-certify Jane Smith, the investor here, so that on the TA side, they already know she's accredited. They already know that she's KYC'd and AML'd from an SEI context. Right, so this message flows through. It hits the Platonic blockchain. As Ownera's sandbox, they've essentially simulated the roles of the custodian and the payment agent for the purposes of simplicity here. That's why you're going to see in this diagram, anywhere you see a dotted line, these are aspects that would be kind of stage 2 or stage 3 evolution of this, where we would start to talk to Ownera about how do we take over the roles and responsibilities of the custodian or the cash agent in the DVP scenario, because ultimately those are roles that our clients or we ourselves play in a future state. Once they've essentially acknowledged that Jane Smith's everything checks out, there's enough positions, they issue the asset, we receive on the way back, number 9, through the same channel we can connected to, we're getting published a 35.8 execution report, and our existing FIX gateway knows exactly how to handle it. Didn't have to make any changes other than some simple mapping and routing rules. From there, our digital asset OMS is able to consume that FIX message and convert it into an appropriate JSON publish back to our streaming infrastructure, which naturally then makes the appropriate API calls and accounting book of record updates in 11 and 12. So our accounting book of record, in this case, our custody platform, is now updating the cash and position updates to now reflect that Jane Smith owns whatever it is, 2,500 units of the digital income fund to complete the process. Now, as it works today, some of our clients use everything we have to offer and log into our system. Some of them prefer to use their branded front ends or white labeled front ends. So we have a process by which our accounting book of record is replicated to their systems. And that's what we're showing here between 13 and 14, is that our client could then actually visualize exactly what happened under the covers, that Jane Smith now holds this amount, and it happened, almost near instantaneously in this case, which is essentially what we're targeting to achieve with network effect here in this space. Obviously, there's a lot to unpack here, and we certainly can answer many questions, but hopefully this was a little bit more detailed to kind of walk through it. Ultimately, if I was to ask you to take anything away from this, is that it is a mechanism to do things a little bit quicker without having a major overhaul, right? Organizations have to make decisions and trade-offs. There are certain things you can and cannot do. And I think this is an opportunity to explore how to move forward into this space if you can't just do a complete lift and shift.
Yeah. And I think that as we look at our industry in general, the main thing to say here is that if every organization like SEI had to connect with every tokenization solution, right, and every custodian and every order management system and connect their APIs to each other, we would have, instead of having a fluent kind of digital environment, it will be like trying to get to Amazon by connecting your modem to the Amazon bookstop and then connecting your modem also to Google to do a search. It would just be an impossible spaghetti of connections. And so those basic kind of abstraction layers are designed to make tokenization much, much more scalable in the market by connecting them through one connection point to their FIX gateway that they already have, that already works. They're already connected to a lot of things they've already tested a million times and are used today, and gradually introduce more and more assets that are actually digital and tokenized. That's really the model. I'm going to skip the collateral mobility because I want to make sure that we have enough time for questions as well, and we're coming on the hour soon. So here we have the document, and also maybe Milena can say a few words about the sandbox project that we've done. But by the way, the sandbox is here. All the presentations, all the recordings of all the sessions are here. All the documentations of how to connect. It's all in here and in the document itself. So Milena, do you want to say a few words about the document?
Yeah, of course. Thank you, Ami and Justin. So yeah, what we did last year in the summer and fall, we brought the industry together. We brought the fixed traditional world with the digital world, represented by the GDF. Ownera was the integration partner. And we basically reached out to the tokenization community, asked who wanted to participate. We had a series of calls. And then we had volunteers sign up to actually do testing of the use cases. The whole industry decided on the use cases, which were private credit, private equity. We did a corporate bond and repo clearing. And the main participants that actually did the test were SEI, who's on the call here today, U.S. Bank, Platonic, OTC Digital. And with the help of Deloitte, we were able to put together the white paper. The link of the white paper is right here on the screen, and we'll be sharing the slides after the call. So if you're interested, definitely download the white paper. And if you want to get involved in actually doing a test yourself or want to connect to FinP2P, please reach out to me or to Ami or even Justin here. The emails are here on the slide. Thank you so much. Back to you, Ami.
Thank you. The last thing I put here is I talked in the beginning about the DTC collateral mobility. I think this is a very interesting, it's led by the DTCC group. The interesting point here, it means that once this when and being approved and go into production, this will enable potentially $100 trillion worth of assets to be tokenized. Or available for collateral mobility application that are tokenized. And with the work that we've done here, all of this should be available through FIX as well. So if you want to see the live demo, it's next Wednesday. You can register. The information for registration is available. You can see it on my LinkedIn as well. And with that, we have, I think, pretty much 10 minutes for questions. So opening it up for Tomas, if you have anything that you want to share.
Yeah, thanks a lot, Ami, Justin, and Milena. We did have some questions in the chat. I see that Leo was asking something. Oh, Justin, I see that you actually answered already, right?
Okay. Maybe.
Yeah, the question in there, just for everybody else, is are there alternatives or competitors to FinP2P? Are there plans to interoperate with them? That could either be for me or you, Ami. I don't know if you wanted to give that one a go.
Yeah, so we're not aware of a kind of routing solution similar to FinP2P that's connected to everything. FinP2P is by far the market leader in connectivity for the tokenized, specifically for the tokenized market. But whatever else comes, FinP2P is completely open, so it will connect to other networks as well. For example, we are connecting to some of the crypto interoperability solutions that are enabling to move assets from one blockchain to another or provide oracles for data. So the plan is to connect everything to everything. There's nothing proprietary. It's completely open.
Maybe the other thing I would add is, there's tremendous focus on the whole global world of tokenization now. There are a number of great ecosystem initiatives growing within that space, whether that's digital exchanges, whether that's environments such as the DA Canton network or the ERC 3643 standard or whatever. The real big problem, though, is what do you do when you want to interoperate between those environments? What do you do when you want to reach all market participants? What do you do if somebody just wants to buy assets and they don't want to know about blockchain? They just want a connection point through their FIX gateway. So that's where FinP2P as an open peer-to-peer protocol is sitting up, but one layer up, if you like, enabling all of these ecosystems. You could call them pools of liquidity that either have assets and investors, or maybe they've got assets or they've got investors. FinP2P provides that open peer-to-peer approach for entities to connect in and between all of these various growing ecosystems. And it's obviously agnostic and neutral to the global jurisdiction where it is. It's agnostic to the type of asset. It could range from public capital market assets. That world kind of works, but it's held together a lot of sticking tape. I built much of it over 30 years. Or it could be private markets, it could be money market funds, it could be whatever. So it's agnostic to all of that. It's agnostic to the jurisdiction, and it's agnostic to the ecosystems that's interconnecting.
Yeah, I want to add one point to what you mentioned, Anthony. I think at the end of the day, in the adoption curve of where we are, whether we're at the chasm of the early adopters and technologists to the early majority, we feel like we've been standing at that precipice for a while, and there's really that linchpin of how do you get buy side into this space easier, right? We have a lot of high quality assets that are out there, they're dispersed, they're fragmented, but getting buy side there simply, I think, is an important piece to this puzzle, because for a very long time, crypto narratives have been very complex in nature of how do I manage a wallet? How do I manage a private key? For the mass adoption hockey stick things, it needs to feel like it's under the covers, right? Most general purpose users don't know what TCP/IP is, right? And they don't need to know, but they know that I can get to Amazon's website, I can place orders there, I can get to Uber and do what I need to do. So I think if the benefits flow through without having to manifest the pieces underneath the covers, and they can find some form of trust there, that is, to me, the key kick point of how can I get into my system today, whether it's a wealth management platform, portfolio management platform, and whether it's private market assets, existing traditional assets, I can essentially work with them based on my investment goals, and I get just some materially beneficial outcome from buying that asset over another. I don't need to necessarily know it's this blockchain or that blockchain, but I have better liquidity, it's cheaper, I can get into it with a lower ticket size. I don't have to put up $1 million. I can maybe get into it for 20,000. These are the benefits that impact the investors that are putting the money in these products. Like, you can put a product out there, but if no one's buying it, doesn't matter. And so at the end of the day, distribution and simplicity and onboarding is what's going to take it to that hockey stick moment and that early majority adoption. Just a little bit of my humble opinion, but that's the part that I think has been really, really delayed. And I think a lot of the POCs and a lot of the early pieces were all about, can we get it there, get a high quality asset there? But we haven't quite found the formula for the onboarding piece. And I think Ownera is doing a really great job of trying to make that simpler.
I think maybe we should highlight as well, we saw a great demo Amy did of accessing an asset, investing in it. So implicitly that showed us a primary demo, just to highlight that the peer-to-peer protocol supports secondary trading, right? So the ability for entities to publish buy and sell intents, communicate those peer-to-peer. It's a peer-to-peer environment. It's not like you can have exchanges with central limit order books. They can run routers, and then they can access liquidity through these peer-to-peer connections, much as happens in the public capital markets today. So this whole paradigm is not just about the distribution. It is about the trading, and it's when you get a critical mass of distribution that we're all looking to unlock that secondary market liquidity, especially in assets which are traditionally less liquid. And then we have the conversation that we've been having in the last few years about private markets, etc. So there is, Ami, was maybe one for you as a question in the Q&A from Hilary Scott. How fast can an integration be implemented?
So the routers for FIM-P2P, FIM-P2P is a protocol that is published, and then Ownera built the routers. With the routers, we actually built adapters for pretty much any platform that you can imagine. So if you're on a public Ethereum or on a Canton or a Corda or a Beju or non-EVM competitor, you could get an adapter that connects to the router that will enable you to connect very, very quickly. In some cases, it takes 2 weeks. In some cases, it takes a month of one developer. And in some cases, it just works out of the box. So I think as we go forward in the market, it will be faster and faster. But even now, connecting to a router is much easier than connecting to even one other party, right? Because you don't have to talk to anybody on the other side. You just connect to the API, the router works, you can test it against, against sandbox other routers, and then plug in and it works. In the same way that, in the internet, when you buy a router, it works. Now, critical to explain here that Ownera, you can think about like a Cisco, we're building a router, but if another company came and Netgear came in and created a router that is compatible with FIM-P2P, it will work with ours as well. So it's open for competition. The whole idea is that it's open because we believe that the only way that you can get the market to work is by creating open protocols. Otherwise, the financial institutions involved are very strong, very big, very independent, and they don't like to work on platforms built by their competitors. And so instead of having all these wars between financial institutions or all these kind of whose API is going to be winning the market, FIM-P2P as an open source is basically trying to connect everybody to everybody, and so far, very successfully. And I would say even more over the last 3 months, it's growing exponentially because of the U.S. opening up for business on digital assets. So, when is it happening? To Justin's question, we're seeing it happening now.
Okay.
There was, Thomas, did we want to add that other question from Leo? It was a little bit more technical.
Okay, if we can do it quickly, would be great, Anthony. Then we're going to have to wrap up. I'm sorry.
Or we can pick it up with Leo.
You can wrap up. It's 1 more minute, Thomas.
Okay, great. Well, first of all, thank you so much to our panelists. Thank you, Ami. Thank you, Justin and Anthony and Milena. And for those of you whose questions we didn't get to answer, feel free to reach out to us or at Ownera directly. Milena has shared the link in the slide deck, and you'll be able to see the slide deck as well as the recording of this presentation in our webinar library. And of course, everybody, thank you for joining us. Now, before we go, I would just like to invite you to also have a look at our event page for our other upcoming webinars, as well as the events where we'll be present live in person. I would also like to invite you to visit our meetup page to see the list of upcoming meetups, also both live and in person. And Yash had one question about the careers. So we will have a meetup about career fair coming up in May. So I would invite you to have a look at our meetup page and join any of our upcoming meetups. I would also like to invite you to have a look at our Discord. There's a lot of real-time interaction there. You have information about the project, special interest groups, and our ecosystem as well. It's a very active community, and you can get answers to your questions very quickly. I would also like to invite you to join us, have a look at our membership page if you are a corporation and are interested in becoming a member. Now, Once again, thank you so much for watching. Thank you also for the people joining us on YouTube and LinkedIn Live. And thank you again to our panelists. It was a very informative discussion. And see you again next time on the next webinars.
Thank you very much.
Thank you so much.
Thanks, Thomas. Yeah.